In an age of rising uncertainty and financial chaos, the conversation about precious metals, gold and silver, is gaining unprecedented traction. Investors, faced with the volatility of traditional markets, have begun to explore these age-old assets as safe havens. One compelling argument driving this shift comes from industry experts like Andy Schectman, who believe we are on the precipice of a dramatic bull market for metals, unlike anything seen before. With Wall Street asleep at the wheel, an explosive surge in demand for precious metals could soon turn the market upside down, leaving those unprepared scrambling for resources that simply may not be available. This narrative is not just speculation. It's rooted in observable market trends and an understanding of the deep systemic risks plaguing modern financial systems. The notion that there's no bull market like a metals bull market finds its foundation in the behavior of investors who view gold and silver not merely as commodities, but as tangible, irreplaceable stores of value. Historically, these metals have acted as financial bulwarks, particularly in times of economic distress or currency devaluation. People who have invested in gold and silver over the last decade have seen remarkable returns. Gold, once priced at $1,200 per ounce just a decade ago, now trades at over $2,700. Silver has surged similarly, climbing by 40% in just a single year. These numbers, however, only scratch the surface of what could happen if the broader financial world wakes up to the undervaluation of these metals. The catalyst behind the undervaluation lies largely in the manipulated suppression of prices, primarily through aggressive short-selling on futures markets like the COMEX. This artificial control creates a significant disparity between paper markets, where contracts are traded, and the physical markets, where actual gold and silver are bought and sold. As Schectman notes, this disconnect has created a severe undervaluation of these assets, hiding their true potential from mainstream financial advisors and investors. Wall Street, focused on equities and bonds, has ignored the metals market, largely because it has been lulled into complacency by artificially low prices and a false sense of security in the U.S. dollar and the overall economic system. However, this illusion of stability is starting to crack. The global financial system is teetering on a knife's edge, with stock markets propped up by a few mega-cap tech stocks, a bond market suffering from an unprecedented lack of demand, and inflation running much hotter than official statistics admit. John Williams of Shadow Stats argues that true inflation is closer to 11%, far above the government's reported 3.5%. When you take into account the real rate of inflation, the returns on bonds and savings accounts become negligible, if not outright negative. Investors are faced with a grim reality: holding on to cash or bonds is essentially locking in a loss. This realization is beginning to steer investors toward alternatives like gold and silver, which are not only resistant to inflation, but also carry no default risk. Schectman's analysis goes further to highlight the supply constraints that could exacerbate this potential crisis. The production of precious metals is concentrated in a handful of countries, with the major mints located in the U.S., Canada, Austria, Australia, South Africa, and the United Kingdom. The two primary North American mints, the U.S. Mint and the Royal Canadian Mint, are already operating at capacity, and yet their production capabilities fall far short of meeting even a modest increase in demand. Mexico, despite its historical association with silver, contributes minimally to global supply. The situation is dire, and if even a tiny fraction of global wealth reallocates towards gold, the demand could outstrip supply 20-fold overnight. The scarcity scenario is not hypothetical. Schectman cites historical precedents and recent trends that show how quickly the market can turn illiquid. When economic or political crises hit, investors rush to secure tangible assets leading to sudden and severe shortages. During these times, the higher the price of gold or silver climbs, the stronger the demand becomes a phenomenon that runs counter to typical market dynamics. In most cases, rising prices deter buyers, but with precious metals, the opposite holds true. As prices increase, it serves as validation for the investors' fears about the fragility of the broader financial system, driving them to purchase even more. This demand surge could very well trigger nationalization efforts, where countries decide to hold on to their precious metals rather than export them. The logic behind this is simple. If domestic investors and institutions begin clamoring for gold and silver, why should national mints and refineries prioritize foreign markets? In such a scenario, supply would become localized, leaving international buyers, especially those in the U.S., facing unprecedented scarcities. Schectman alludes to this as a realistic possibility, especially in an environment where trust in the U.S. dollar and international trade agreements is rapidly eroding. A key aspect of this unfolding crisis is the inefficiency and deliberate underproduction by the U.S. Mint. Despite statutory obligations to meet public demand for silver eagles, recent reports suggest that production has been drastically cut. Jack Sermon, head of Silver Eagle sales, has gone on record stating that he was instructed to limit production despite clear demand from primary distributors. Sermon's comments, combined with the sharp drop in production figures, point to a troubling reality. The supply of silver is being intentionally constrained, potentially setting up the market for a catastrophic supply crunch. The implications of such a supply crunch are profound. Should a major financial event, a bank failure, a stock market crash, or a geopolitical conflict push investors en masse towards precious metals, the shelves could be emptied within days. Schectman paints a vivid picture of this scenario, where major retailers, unable to restock quickly enough, would be forced to turn away customers. The result would be a frantic scramble for whatever supply remains, with prices skyrocketing as a result. Silver, in particular, could become unobtainium, a term Schectman uses to describe a situation where the metal is simply not available at any price. This looming crisis is exacerbated by the apathy of institutional investors and the general public. As Schectman notes, less than half of 1% of portfolios have any allocation to precious metals. Even a modest shift, say a 2.5% reallocation, could lead to a five-fold increase in demand, wiping out existing inventories in the blink of an eye. In a scenario where financial advisors recommend a 10% allocation, the demand surge could multiply 20-fold, leaving the market depleted virtually overnight. It's a scenario that could play out faster than anyone anticipates, especially given the speed at which modern financial markets react to new information. In conclusion, the narrative Schectman presents is one of urgency and inevitability. The artificially suppressed prices of gold and silver, combined with systemic risks in the broader financial system, create a tinderbox waiting for a spark. The moment investors collectively realize the precariousness of their current holdings and look towards precious metals as a safe harbor, the market could enter a feedback loop of rising prices and skyrocketing demand. The defining characteristic of this market, as Schectman predicts, will be its inaccessibility, where those who do not act swiftly will find themselves unable to acquire gold or silver at any reasonable price. For investors seeking to protect their wealth in these turbulent times, the message is clear: now is the time to act. The window of opportunity is closing, and when it does, the market could become a desolate landscape of empty shelves and inflated prices. As the old saying goes, the time to buy insurance is before the house catches fire. In this case, gold and silver are the insurance policies, and the fire is already smoldering. The question now is not if, but when the flames will fully erupt. Those who have positioned themselves accordingly will weather the storm, Those who have not may find themselves left with nothing but ashes.